have to figure out why you want to buy a rental property. My purpose is to create passive income and enough passive income to take care of the majority of my bills. Hey, I'm Julian Chavez. I'm 23 years old. I own a real estate brokerage in Miami, Florida, and I am a real estate investor. I own 16 rental properties. I bought my first one when I was 21 years old on a Valentine's Day. And I'm going to teach you how to buy your first rental property. So one of the most important parts in buying a rental property is securing the financing on it. You should probably do this before you start looking into buying a property altogether, just to make sure that you'll be able to buy it. There's two different kinds of financing you could use, which is the conventional side, which is just a regular Fannie Mae, Freddie Mac loan. With this kind of loan, they'll look through your tax returns, they'll look through your debt to income ratio, they'll look through basically everything. There's another side of lending called non-conforming lending. These are nicknamed non-QM loans. And for this, you'll need a good credit score, and they'll just make sure that the property cash flows well at a certain amount that you could make a profit every month, and they know for sure that you could pay the rent. The rent is determined by the appraisal report. You can't just tell them it's going to rent for a crazy amount of money. They do an appraisal and they figure out that it's really going to rent for that amount, and then they'll give you the loan. With that kind of loan, you also do need to come in with about a 20% down payment. It's about the same thing for conventional. Some conventional lenders for rental properties will even go down to 15%. So it's all a give and take on whatever you want to choose, because with Fannie Mae, there's more regulations depending on the amount of properties you have, debt to income ratio. Non-QM is just a little bit easier, but it's also a little bit more expensive. So it's all up to you. So the next step is to establish an amount of money that you have to come in with as a down payment. This will be between 15 to 20%, whatever the property costs. I recommend that you buy a property under the $200,000 mark. Obviously, this will change depending on the market you're in. If you're in San Francisco, it's a lot different than if you're in Miami, Florida. And I also wouldn't be scared to go a little bit further out than the major cities. So if you live in Miami, you could look for cities an hour or 2 hours north. Same thing for any other metropolitan area. Another step in this process is determining the area that you want to be in. Because, for example, if you're in Miami, you don't want to look all throughout Florida. You want to pick one or two cities within Florida to focus on, or maybe even just one county. That way you could focus in, understand the true values of properties over there, and keep your searches up. You want to also determine a price range that you want to be in. Like I said before, you want to keep it under 200,000, because really when the economy shifts to good or bad, usually those hold their value better. If you're looking at $1 million deals, those have a way higher chance of shifting in value. When you're looking at a single family house for 200,000, it's not really going to lose too much value. As a first-time real estate investor, I recommend you start with an area that you could at least drive to. It doesn't have to be within an hour from your house, but at least drivable. You don't want to do your first deal somewhere that you have to fly in. You want to be able to visit it, check out the area, and really understand what's going on there. So once you establish the area that you want to buy in, you should really look through that MLS every day if you're a realtor. If not, talk to a realtor in the area that could give you access to the MLS every day, look at new listings so you can understand the pricing there. But you really want to narrow it down and make goals for yourself. So whether that's sending one offer a week or sending 5 offers a week, just start sending out offers. Obviously those offers, you want to make them based off a good amount of cash flow. I like having at least $400 a month worth of cash flow, because it's never really that much. Once in a while, a fridge will break or a toilet will get clogged and you have to do repairs. So you want to have a good amount of cushion there for the deal, because $100 a month just won't cut it. So the next step to buying your first rental property is actually getting under contract on that deal. Once you're under contract, you definitely want to have an inspection period. That way you can send a trusted inspector out and make sure everything is structurally sound with the property. When you buy your first property, you don't want to buy your first headache, because it could really lead to that. After you're under contract on the property, the inspection goes well, just close on the deal. After that, it's crucial to go in there, take great pictures of it, and get a good qualified tenant. That's also a very important factor, is who your tenant's going to be. I don't recommend getting people with an extensive background or a bad background. You want to get people with a better credit score and a good income in there. Good tenants really make or break your property. So this video here was just like a simple video on how to get into real estate investing. Later on, I'll be going more into detail regarding the financing, which is really important. I'll go into details about conventional loans versus non-QM loans. I'll go into details about how to actually find more deals. It's not just the MLS. We use cold callers, you could use postcards, any kinds of direct mail. If you like this video, subscribe to the channel, or follow me on Instagram, Julian Chavez _RE. I actually manage my own real estate fund, so you can reach out to me directly and ask me questions about real estate investing and my own real estate fund, which allows regular people to get into real estate investing without having to come in with such a big 20% down payment. Our minimum investment is $2,500.